For you to fully understand, either as a client of ours or one of our advisors, how the IBC or privatized banking system works, you have to understand the basic structure or platform for IBC. If you understand the platform, then the process becomes a little bit more understandable. So to understand that, you've got to understand how a life insurance policy works, okay? So premiums are dumped into a pool of money. Now, what kind of premiums? Premiums are based upon age and a client's health and the amount applied for. So those things are what determine what the premiums are going in, what's called a price per thousand, a cost per thousand. So there's always money built in here that's profit for the insurance company. They anticipate all these things coming, right? So there's profit built in. So premiums go into this pool. That pool expands and is massive. This is a huge pool of assets. Out of that pool, once a year, the board of directors declares a dividend. And they will pay a dividend to policyholders. Dividends are not guaranteed, but most of these companies, all of our companies, have a track record of over 100 years paying a dividend. Over 100 years straight, okay? So a long-term history of predictability and stability, right, coming from these dividends. Now, technically, a dividend, the definition of a dividend is a return of excess premiums paid. That's what this is. So we're paying as much as we possibly can into it and then allowing the company or anticipating the company to send us a dividend check. Now, most of our dividends don't come to our policyholders or to our clients. They're automatically reinvested and they purchase additional chunks of insurance. They're called PUAs, or paid up additions. So most of the time, dividends are used to purchase paid up additions. That's a very important thing. Paid up additions for the client really means cash. That's where your cash is. Also, not only does the pool of money pay dividends, it also pays out expensive operations, what it takes to maintain home office personnel, administration, all the operations involved. It also has to pay death claims, right? Every now and then there'll be obviously a death. So that death claim has to be paid out of there. Now on this side, the insurance company invests in what's called joint ventures. These are large, massive building projects. It needs to just make a small margin for these to be extremely lucrative for the insurance company. It also invests in blocks of mortgages, not like we're accustomed to from 2008, 2009, but A-grade, top shelf, premium quality mortgages. Again, there's a small arbitrage, a small wealth percentage that's gained from mortgages. But by far, the most lucrative and the most important investment side for the insurance company is policyholders. It's you and me. When we go to do a policy loan, that policy loan is normally coming to us at 4 to 5%. Could be higher, could be lower, but normally 4 to 5%. So, and that money is guaranteed to be repaid, right? Either by us when we're living or out of the death benefit after we're dead. So they're guaranteed that 4 to 5% return. So insurance companies are extremely lucrative and we want them to be, right? This is our company. This is our future. So these companies, again, over 100 years old, A+ rated, they're mutually structured. They're not stock companies. What mutual structure means, it means the policyholders actually own the company. They're not public, which means they would report to a board of directors or to their stockholders. That's not happening here. They're actually owned by us, owned by the company. So that makes this pool of money substantial. And the way that you and I can use this system for our profit and for the profit of all of our clients, for our loved ones. We want to build that pool up, our little piece of that pool. I want my little piece of the pool, if we could extrapolate that right there, I want that piece to be big enough to cover my life. Everything that I've got to spend money on. So in my case, that needs to be a large thing because I like to travel, I like to help other people out. So that needs to be a large piece of the pile. So you need a lot of money going in here. Normally about 25% of your take-home pay going in these accounts, so you build up a large banking system. And that is how a life insurance policy works.